Hello students and traders, good morning, good afternoon, good evening. Welcome to another session of the All-Round Analyst. My name is FX Kalapanti and I'm going to be your host on this session. Remember, we are not by any way commodity trading advisors. What does that mean? We do not tell you what to trade or how to trade. Whatever we do here is just for analysis purposes. It's how I view the market. It's how we see the market on our side. And it's up to you to decide on whether to take the trade or not, which means the trading decision is yours to take and yours alone. Alright, that having been said, today we want to look at a top-down analysis on EURGBP. So we're going to start off from the monthly. If we look at the monthly, what do we see? We squeeze in the chart just a little bit so we can have a little bit of perspective. So we will be applying smart money concepts here, and we'll show you just how smart money works. So you want to ask yourself, which direction is the market more likely to go? Market has pushed up, has come down to fill. Market went all the way up, and then it came back to fill all of this imbalance created. It came all the way down to fill all of this imbalance here. Then while going down, the market created some level of imbalance like this one here, and the market has obviously come back up to fill that level of imbalance. We see that the market, while again going up, created some imbalance around these areas. Okay, so expect the market to sooner or later come back to fill those areas. Okay, so this is an imbalance sitting just at this point. Now you will notice that the market had a high, took out that high, and again took out that high, which we can call a liquidity grab. Now, so we see the market taking out these highs, which will amount to a grab of liquidity. I like to use just LG for it, liquidity grab. Now, what are we waiting for now? We expect the market to come. The market should ultimately come and fill up this imbalance and come all the way down, perhaps to this other block here, perhaps to this other block where it will likely look to U-turn possibly, or the market might continue all the way bearish. The market will either come, the market should fill up this other block and come, so fill up this imbalance and come down to this other block. The market might U-turn from this point and go back up, or alternatively the market might just come back, come down, pull back a little bit and go down to take out these levels at this point. Okay, so that will be our perspective here, and wait for the market to show us what it wants to do. But as of now we can see that the market has had a high here, grabbing liquidity above these other previous highs. Grabbing liquidity above these previous highs, which are equal highs. You can see them as equal highs. Then grab up. This is the grab of liquidity. These are equal highs. Let's put that there. So liquidity. Okay, so liquidity was here, market broke above this to take out liquidity, and the market should go down. Now, what is the market supposed to do? Market is supposed to come down, take out this level, take out this level. That will now give us the break of structure we are expecting. The market should pull back to this other block here, test that other block, and then go all the way down bearish. Alright, so that will be our perspective. So now this market is near-term bullish. Expect a bullish pullback to take it. No, sorry. It should come down first. It should come down first and take out this structure. Okay, so that'll be our perspective on this. And with that perspective, we have a bearish perspective. We will now move on to the lower time frame. Next lower time frame we want to look at is going to be the weekly. So we go down to the weekly, and what do we see? You can see clearly that the market is in downswing, not a downswing, rather liquidity grab above these highs. Market is coming down. It's for market to come and give us a break of structure at this level. But we should ask ourselves, is the market going to just drop down there at a go? The answer is no. What's the market likely to do? Let's see. We can see that this market has come from this high, has taken out this level, which will now be a minor break of structure on the weekly. That's pulled back to this other block here, and has gone all the way down. Having come here, it has taken out again this other level, another break of structure. Market is pulling by, expect the market to pull back to about this level here, this other block here, or maybe even lower to this one here, or maybe even to the very first one here. Market should come back to one of those levels. It may U-turn here and go down, or market may go all the way here to the second one and go down, or go all the way up to this one and go down. But whatever it is, market is currently short-term bullish. Expect reversals around one of these other blocks here. Let me make this more tidy. See what I'm talking about real quick. So we have another block here. The market is likely to come back to that other block, or alternatively, it may come back. If that fails, it may come back to this other block here. Yeah, that will be it. Okay, so this is our perspective, expecting the market to pull back bullish, get into that other block, and then give us a U-turn. For the market to come all the way up here, then U-turn and go all the way down, take up, fill up that imbalance, come all the way here, clear out these lows here and grab liquidity, and then maybe just a little bit of U-turn, and then we go down, and that will be it. Okay, but in the long run, market will eventually go down. But you can see short-term weekly. On the weekly, this is looking like it has reversed here already. Notice how the market has come to fill up a good deal of this imbalance here. It has filled up almost all of it. Just a little bit is left. So market will eventually fill that up, come to fill up this other monthly imbalance, and then go into our other block down here. Okay. Now, that having been said, let us move on to the daily. Alright, sorry about that. Let's clean this up just a little bit. So we can, just before we leave, we can drop a level of imbalance here. That's what is left now for the weekly, and it's going to be imbalance. Okay, so there we are on the weekly. We want the market to come down and perhaps test this other block down here, pull back up. But for here, the market should go up just a little bit, and then so the market has formed some equal highs here. This high and this high really close. The market should run those highs, take us to about this other block here before market go all the way bearish. Now let's look at the daily. What do we have on the daily? On the daily, we can obviously see a strong down move. Okay, so we see the market moving real bearish, comes down all the way here, comes back up to test that other block, goes down, breaks this structure, comes back to that other block, breaks that structure. Market should come back again to another block somewhere around this area. Okay, now the concept of other block is very simple. Let's see how that works. I'll show you how it works real quick. So I'm gonna zoom here and see how that happens. So here we are. This is the up move. So we'll take this as our up move, and we'll see how beautifully the market taps right into it. Okay, we're going to use this other bullish candle here. Let's see. Okay, so we see how the market goes down, comes back into that other block, at this point, and then goes down. So now that other block has been used up. This will now be a new other block. Then what are we waiting for? Wait for a break of structure. Remember, this liquidity grab above all of these highs. Market pulls up for a liquidity grab, reaches this other block. We have it here. Gives us a new other block. Market goes all the way down. There's a break of structure at this point. After this, following this break of structure, see it right here. The break of structure comes right here. This is the break of structure. With that break of structure, the market has not come back up, so the market has run all the way down. Now the market is beginning to U-turn and come up. Now, next thing for us to do is to look for possible points where the market will U-turn. So we look for other blocks all the way up on this down impulsive move, and then we see we have this one. This one. This has been done. Okay, so there we are. We notice a whole deal of imbalance around here. A great deal of imbalance around here that needs to be filled up. So we expect the market to come back and fill all of that sooner or later. Okay, and the market is going to fill this up. Then it has to go all the way to possibly this other block here that brought about that imbalance. Okay. So our perspective here on the daily sees the market going up. Now the market is even here to take out this level, but for whatever it's worth, we've seen the market have this stretch that's taken out this level. The market might come back down. The market might come back down to this level, this other block here, just to fill up this level of imbalance we have here. It's a whole lot of imbalance around here. From here to here was the imbalance. Market has filled about 40% of it and some level left. So the market might come all the way down into this other block and then begin to reverse up bullish. Perhaps from here it's going to go down, or market might go up, touch this other one before it goes down, or might come hit this one, come back down, go up, fill up this imbalance, hit this other block before it begins to go down finally. Okay, so that's what we see on the daily. We'll see how to translate that into a smaller time frame. Okay, now if you look at this, we can see market has not taken out this structure. We can see a strong pullback here. So it's a possibility market is reacting to some other block somewhere inside this week up here. Okay, but until that is certain, until that is done, we cannot say for certain what the market is doing. Okay, so we are just gonna have to wait a little while and or rather go down to a smaller time frame to have a clear perspective of what is going on inside all of these places. Okay, so that being said, let's just leave our levels here. I have another block here on the daily, and we have this some other here. Let's see. Took it through this week. If we scale down to a smaller time frame, we would narrow out. We will refine it. Okay, so now we're on the day. Let's move on to the 4-hour and see what the market is doing inside the 4-hour. Okay, what do we see? We see market here, down here. We see a strong liquidity grab below all these levels. Market came down here, grabbed liquidity, came up rather, broke market structure up here, pulled back down to test this other block, took it up into the skies, had a break of structure up here. Market has come down to clear this level down here. So this might be a liquidity grab followed by a break of structure. Market will try to give us a particular wake-off and then boom, all the way up into the air before coming back down eventually. So this will be our perspective on this, and this will be our perspective on this because the market has shown us some move to the upside. So remember, all we want to do is to follow the market in doing what it is doing. So but we expect market to fill up all this. Market has taken out this level, taken out this other block. Expect the market to come all the way down, perhaps this other block, make a U-turn and go up. Or the market might go up just a little because you can already see a break of structure here. Have liquidity break of structure. Market has come back into this other block. It should be clear on a smaller time frame. And we'll see just how the market is playing out. There's a little bit of consolidation here, but the market might eventually come out to fill all of this imbalance in this position before going back bearish. So let's go to a smaller time frame. Let's look at the 1 hour to see what we will find in there. Okay, on the 1 hour, what do we see? What do we have? We can obviously see market came all the way down, creating imbalance along the way. There's an imbalance here, a little bit of imbalance right here, nothing here. I think all of these have been filled up perfectly. There is some imbalance in here. Okay, which market should eventually come to fill up. Now what do we see? We see market grab liquidity above these levels. we see liquidity graph below these levels. Market came down and has gone up. We see a break of structure. Market has not come back to that level. Market went again to break that structure. Market has not come back to test that other block. But let's see, just to be certain, if market has come to that level. Okay, market came back to that level. So we see the market coming from here, going up. Break of structure above here. Break above this structure. Took us all the way here. Market has come back down, come right into that other block at this point, and market is expected to go up. For the market to take out this level, market has printed equal highs there. Eventually the market should take out this level, come back down to test the other block that brings the demand, and then goes all the way up. Now we have a whole lot of imbalance up here to fill up, so this should give us the energy and the push to fill up all of those imbalance, come to this other block, and then give us some reversal move that will take us all the way down. Okay, so perspective on the 1 hour is bullish. We are bullish on the 1 hour, and we'll just look to it that way. Clean this up just a little bit. Okay, so this is our direction. Market has tapped into this other block, gone all the way up, and expect market to take out this level. Let's see. The high here is 86174. This one is 86171. Okay, so it's here to take out this high. We expect market to take out this high eventually, take out this high, come back perhaps into this other block. Now this market has tapped into this other block. This other block is used up, so we're expecting the market to come into this other block right here. Last down for the up move, but playing safe, I want to keep our stop loss just below this level, and then we'll find better. This should be a level to watch out for. Now we will go into the. But first, we want a break of structure. Our first concern is a break of structure above this level. So, number one, break of structure. We've already had a liquidity grab. Now this is going to be. It's another block 2.0. It's going to be another block 3.0. So the market hits this, gives us a break of structure, pulls back into this level, and we are going all the way up. Now, where will be our target? We're going to be having a very high target that take us all the way here. So this would our trade will look something like this. Okay. And go all the way up here to give us a beautiful 1 to 13. Okay, but we wouldn't want to enter on this. Let's see, our risk would be it's going to be quite wide. It's going to be quite wide. Okay, 5.8 pips. Now we would like to refine that. So towards refining, we would like to bring it down to a smaller time frame, which is going to be the 15 minutes. Okay, on the 15 minutes, what do we have? We look for another block inside that other block. So what do we see? And we see that here is the other block of interest. Okay, just put it like this. Okay. And I think that's the best refining we can do, and allow the market to come all the way down. Alternatively, we can also see another block which we would like to look out for, pay attention to. So it's a possibility the market might U-turn at this level, or it has tapped into it already. It has tapped into that level already. So this would be our first possible trading position. First possible trade is this one, okay, with stop loss just below that low, and let's see. And target still other block above, giving us a beautiful 20.5. Okay, but in the event that fails, you know, the market is a game of probabilities. You can never be right 100% of the time. In the event that fails, then we have our trade 2 to catch up with. So I'll join on this trade real quick and then see how it plays out. But I'd like to scale down again to a smaller time frame, just a 5 minutes, to have a clearer picture of what is going on inside here. So do this and then do this also. Now we can clearly see what's going on in here. Okay, so this is trade 1, this is trade 2. In the event that this fails, the market takes out this level, risk will be small, risk of 1 to 20, that's our risk. But I see a possibility of the market from this level going up all the way here to this structure level, where I'll look to partial and then come back down, partial, I'll go for break even and then go all the way up into the amount. Okay, but if the market takes me out, stops me out, oh, that's okay. I'll look to enter on trade 2, and that will be just that. Okay, so guys, I hope this helps your day. I hope this helps you find your trading decisions today. And as always, wishing you a profitable trading day. This is FX Kalapandi, and I'm out.